You can imagine Forex as one big market for buying and selling currencies. Okay, now you're surely wondering how to buy currencies on Forex. Well, very simple, using other currencies. So, if you want to buy one currency on Forex, it means that you have to sell some other currency. Also, if you want to sell some currency, you have to buy some other currency. So, Forex trading always implies the exchange of two national currencies. That's why it leads to creation of the basic product on the Forex called the currency pair. Okay, we've got one thing straight. On Forex we trade with currency pairs. But the next question is who trades with currencies in the Forex and why would someone do that? Well, the answer is very simple. First, state authorities trade on the Forex because they want to protect their domestic currency from fluctuations on the global financial market. Secondly, very important participants in the Forex market are financial institutions. But why do they trade on the Forex? Well, because they want to earn money on the same fluctuations. Okay, but where are we on the Forex market? Well, we are very small traders who got the opportunity to access this market through brokerage houses. If you're wondering how we can earn money on Forex, well, very similar to financial institutions on fluctuations between the value of currencies. But for us, there is no physical currency exchange. We can only predict in which directions currency pairs will move, and if our forecast is accurate, we can earn money. For example, if you think that euro-dollar currency pair will grow, you can invest money and buy the euro-dollar currency pair. And if the price of this currency pair rises, you will earn money. Also, if you think that euro-dollar currency pair will fall, you can invest money and sell the currency pair, and if the value of currency pair falls, you will earn money. But remember, this is not a real sale, because you cannot sell what you do not own. You actually bet that the euro will fall against the dollar, and if your predictions came true, you can earn money. Your next question is surely how to predict the movement of currency pairs. Well, it's doing with the help of fundamental and technical analysis, and if you want to learn how to analyze the movements of the currency pair, you will have to stay with us until the end of the course. Okay, now we know what Forex is and how we can earn money on Forex, but why invest money on the Forex? There are many reasons. The first and most important reason is the possibility of high earnings. Yes, the truth is that Forex carries a certain risk, but with mastering the skills of trade and a serious approach to trading, it is possible to minimize the risk and make a decent profit. You probably think that trading on the stock market takes a lot of time and requires a great knowledge in the field of economics and finance, but the truth is different. Trading on the market is available to all of the people. It doesn't matter if you haven't had any previous contact with finance or if you are not an economist, and it is not required to have a high school or college. Also, if you want to do Forex, does not mean that you have to give up your present job. But if you want success, it is necessary to take seriously access to this market. Regarding the fact that trading takes 24 hours every day, you have the ability to customize your own time for trading, which means that you can trade in the morning, afternoon, or in the evening, or maybe all day. The biggest advantage is the ability to access Forex from your own home, from your PC, in the office, or anywhere you have internet access. Trading platforms are available on computers but also on smartphones in the forms of applications. So trading on the stock exchange today is accessible to all. Forex market is very liquid, and of course knowledge gained on Forex you can apply to any financial market like the stock market, indices, future market, options, commodities, etc. Today, Forex is the largest financial market in the world. Daily turnover can exceed 5,000 billion American dollars. This figure indicates that any market cannot even remotely be compared to the size of a Forex. The size of the Forex has made the Forex market the most liquid financial market in the world, which means that at any moment you can make your transaction buying or selling.
So who trades Forex and why? So Forex is largely traded by banks like central banks, corporations, and retail traders. So just let me briefly explain to you, why they get involved in the Forex market. So for central bank, it's usually meant to intervene the FX markets. Perhaps their currency is appreciating too much and they want to remain competitive for their exports. So central bank can intervene in the FX market. For example, in 2012, you have the Swiss franc, right? Pegged against the euro because the Swiss franc was appreciating too much against the euro, and the central bank intervened and pegged the euro at 1.2. So this is an example of the central bank intervening in the FX markets. Then you have banks, right? I know Deutsche Bank, Goldman Sachs, HSBCs, right? Where they trade forex, but as a form of market making to provide liquidity to corporations, and as well as to hedge their book, right? In case they have any currency risk, right? These banks will also trade the forex market. But the thing that I want to point out is banks and corporations, they have close working relationship, because for corporations, right? Let's say, for example, you are a car maker. Let's say I'm a Toyota, right? I manufacture cars. But the thing is that my car spare parts are not found in Japan. I may have to go to countries like maybe China or India to source for these spare parts. So if I'm the car maker Toyota, all right, and I need to buy these spare parts, or rather to buy the raw materials to manufacture my car, I need to get them in the foreign country. So what I'll do is that I will sell my own country Japanese yen for, say, the Indian rupee, right? So I got the Indian rupee and I can go to India and buy the relevant materials that I need. So this is another form of forex trading for corporations, where they typically sell their own domestic currency, right? And in exchange for a foreign currency to buy whatever relevant spare part, raw materials that they need. So this is how corporations dabble in the FX markets as well, right? They also dabble in the FX markets to hedge whatever positions that they have that could be exposed to currency risk. And last but not least, you have the retail traders like me and you who speculates in the forex market, right, to earn a profit, right, and this is something that, and I believe this is the reason why you're watching this video right now, to learn how to trade the forex market. So this is where retail traders come in. So one thing to note, right, I want to share with you the hierarchy, right? So it's no, this is the map. Let me share with you the how it all works, right? This ecosystem. So you can see over here, central bank are the largest, right, over here, and then they followed by all these major banks like Deutsche, Goldman, JP Morgan, and whatsoever. So all these major banks, they have relations with investment funds, commercial company like Toyota, Cadbury, stuff like that, or maybe say hedge funds and who wants to trade in the FX market. So all these banks, right, they typically have connections to commercial companies and large funds or large speculator. And on top of it, right, they also have connections to market maker, right, where you trade from your broker, right? They have connections to your broker, right? Okay, market maker or ECM broker and stuff like that. So from then on, right, this is where your own broker have connection to you, the retail trader, through their own trading platform. So this is how the ecosystem work, right? Banks would communicate with your own retail brokers, commercial companies, or investment funds, right? It does not mean that they will dabble in all three categories, right? For the banks, right? Some of them may just choose to focus on investment funds, some to focus just on commercials company, or maybe some can have dealings with all three different categories. Okay, so but you as the retail trader, you only have access with the connection with the market maker, who then might pass on your order to the bank connection directly, may or may not, depending on how your broker established their own their trading system. Okay, so with that said, right, this is the ecosystem. And to look at the hierarchy, right, this is a source from Baby Pips, right? You can see that major banks, they are at the top, right? They deal with the most number of they put in the largest orders, right? And they typically communicate with one another using this system, right, the EBS system. Okay, and then further down the food chain is where you have your your retail market makers, right? The brokers, the ECNs, right? And this one over here, they put it hedge funds and commercial companies at the same level. But to me, I would say this group of traders are typically one level above retail trading, right? I would say somewhere around here, where there's hedge funds and commercial companies. And last but not least is retail traders like you and me, who trades the FX market. So this is the food chain, right? It's a fact, right? So this is why retail traders, right? You don't move the market. The markets are usually moved by the big players, which I shared with you over here, right? At the top of the food chain.
So how do you read a currency quote? Again, currencies are quoted in pairs and mostly in 4 decimal places. So what you see here is Euro USD 1.35052. Okay. Now, we only pay attention to the 4 decimal places. Okay, the 5th decimal place is known as a fractional pip, and we do not care about that. Okay, so it's too small to worry about. We're looking at the 4 decimal places, right? So the last decimal place represents a pip, and I'll talk about that in a short while. Okay, so when you see a currency pair, the first one is known as the base currency. So Euro is the base currency. USD is known as the quote currency. All right. And like I said, the 4th decimal place is known as the pip. And the pip is the smallest change in the currency pair that we are concerned about. Okay. So in this case, it is 3505. Now, usually when we read it, we don't go 1.3505. We just say 3505. Okay. Now, if it goes from 3505 to 3506, what does it mean? It means that the euro has, or rather the euro USD has gone up by 1 pip, right? Because from 5 to 6, it's 1 pip. Does it make sense? Okay. Now, if it goes 3505 to 3516, what has happened? The euro USD has gone up by 11 pips. Does it make sense? 11 pips. Because 11 plus 5 is 16. Okay. So pip is the last decimal place. So if you look at this entire thing, it's 3,505 pips since it moved up from 0, okay, which was a damn long time ago. Like I mentioned, it's a fractional pip, so we're not going to worry about that. We're going to look at the pip, okay. So like I said, the base currency always has a value of 1, okay. So in this case, euro, we're saying 1 euro. So in this case, what we're saying is that 1 euro is equivalent to 1.3505 US dollars at this particular point in time. So in other words, if you want to buy 1 euro, you have to pay $1.3505 US dollars to buy 1 euro. And if you want to sell 1 euro, you would receive 1.3505 US dollars. So that's how you read currency quote. Okay, now understand that all currency pairs except the ones with Japanese yen in them are always quoted to 4 decimal places. Okay, so 1 pip is 0.0001. Okay, so that's 1 pip, which I mentioned earlier on. But anytime you've got a Japanese yen in the pair, like you've got dollar yen, you've got pound yen, right? Anything with a yen, okay, the pairs are always quoted to 2 decimal places. So whenever you have a yen, 1 pip is the 2nd decimal place. 2nd decimal place for any of the yen pairs. So the best example is the US yen or the dollar yen. So in this case, the dollar yen is 98.73 or 98.73. So again, what is this called? Right, the first currency in the quote is the base currency. Right, remember this is the base currency. Let me write down. This is the base currency. And what is this called, ladies and gentlemen? It's called the quote currency. That's right. So remember that the base currency, which is the first one, is always 1. Okay, it's always 1. So what we're saying now is that 1 US dollar is equivalent to 98.73 Japanese yen. Okay, and again, this 3, the 2nd decimal place is a pip. So if it goes from 9873 to 9874, right, the dollar yen has gone up by 1 pip. Make sense? Right, if it goes from 9873 to 9884, it's gone up by 11 pips. Okay, if it goes from 9873 to 9872, it's gone down by 1 pip, right? So you got that? Okay. So in other words, again, right, $1 is equivalent to 98.73 Japanese yen. So again, what's a pip? A pip is known as a price interest point. It's the smallest change in value for any given Forex quote that we're interested in. Of course, the smallest one is the fractional pip, but we don't care about that. So it's the smallest one we care about. Okay, so once again, for all non-yen Forex pairs, 1 pip represents the 4th decimal place of the quote. Okay, so again, when the Euro USD moves from 3505 to 3506, it's a movement of 1 pip or 0.0001. Okay, for yen Forex pairs, 1 pip represents the 2nd decimal place of the quote. When the dollar yen moves from 80.55 to 80.87, it's a movement of 32 pips. Right, just reiterating what I just said. Right, so I hope you understand, you're clear at this point in time. Alright, so the next thing to understand is contract lot sizes. So in the Forex markets, when you buy or you sell, you're buying units of currency, right, in lots. So one standard lot that you buy is always 100,000 of the base currency. So if you buy one lot of Euro USD, you're actually buying 100,000 euros. If you buy one lot of dollar franc, you're buying 100,000 US dollars. Okay, so it goes by lots. And again, 1 pip is the 4th decimal place for non-yen pairs, and for yen pairs like dollar yen, pound yen, is the 2nd decimal place. So just remember, one standard lot is 100,000 of the base currency. Now, you don't have to buy one lot. You can buy less than one lot. Okay. So, like I said, a standard lot is 100,000 of the base currency. And you don't have to buy one lot. You can buy a mini lot, 10,000, micro lot, 1,000, a nano lot, 100. Okay. Now you don't have to remember the names of these. It's not important. What's important is to know how many units you have to buy and how you key in the lot size. Now it depends on the broker you use. For example, if you use most MT4 platforms, you key in terms of lot size. For example, if you want to buy 100,000 euros, okay, for Euro USD, then you key in 1, right? Because 1 means one lot means 100,000, okay? If you want to buy 50,000, what do you key in? You key in 0.5, okay? 0.5, because one lot is 100,000, so 0.5 is 50,000. Okay, let me just write it down for you. So one lot is 100,000, 1, 2, 3, and 0.5 is 50,000. 1, 2, 3. Okay, so let me repeat. If you're trading with most brokers that use an MT4 platform, then you key in 1 for 100,000, 0.5 for 50,000. If you're going to buy 500,000, then you key in 5. Does it make sense? Okay. But there are certain brokers, for example, if you trade with interactive brokers, when you key in, you don't key in by lot size. You key in by the currency unit. So in other words, for interactive brokers, you key in 100,000. Right? You key in 100,000, not 1. Because if you key in 1, they just buy $1 US. Okay. So you have to key in 100,000. So you have to know the broker you're using. You key in lot size on the left, or you key in the number of units, right? That's really important. But like I said, for most MT4 brokers that you'll be using, you key in by lot size.
Good Forex trader. Well, for me, a good Forex trader is someone who is able to manage risk and make steady gains. A lot of times when you first hear about financial markets, you hear people trading options and stocks and Forex and futures and all these big scary names. A lot of times you also hear people saying, oh, it's total gambling, you're just going to blow money up and it'll be a pointless venture. Don't ever do it. That's a very common thing that a lot of new people who just want to hear about this, they want to get started, they hear the very first thing is, don't do it, you're going to blow money, it's all gambling. And there are ways to make consistent money, but it is very different than what you're sold in the commercials and social media hype that you hear trying to get into Forex. So the fantasy of a millionaire trader that you see so often, the fancy cars, all that stuff in YouTube ads and social media clips and things like that, is very different. There are many, however, everyday traders, people who are stay-at-home parents or students or teachers or people who just want to create a side hustle out of trading the financial markets. It is something that everyday people can do and start wherever they're at. Doesn't mean you're going to be a millionaire overnight, but you may be able to start paying off your phone bill, maybe help pay your rent, eventually pay your rent, and even perhaps someday go full-time at this. It is possible to make financial gains in the markets consistently as a retail trader, just the average person. By the way, retail meaning a person who is just, they're not at Wall Street on the institutional floors. They're just the everyday person is a retail trader, and it is possible as a retail trader to make money. So how much money can someone earn? This is the next question, because again, we just talked about you're probably not going to become a multi-millionaire from Forex trading very quickly, but there are steps we can take to start actually making gains. But how much money can you make trading Forex? This is something that a lot of new traders, they question. How much can you make? Well, there's many variables to this, and it's kind of impossible to give you just a clear, decisive answer from this because it depends on you. It depends on your situation. It depends on how much capital you intend on bringing to the table. It depends on how much risk you're willing to take. Are you the sort of person that's a little higher risk, or are you a very conservative trader, more like myself? Those are things that you're going to have to find in your own style through time and experience in this sort of stuff. And of course, how much time do you actually intend on putting towards learning to trade Forex? Because it is a time commitment, something you should know up front. It's going to take some time. It's a lot of work, but again, it can be rewarding. Now, this is a little bit more on the numbers side. How much can you earn from Forex trading? And this is going to be a varying, depending on who you ask, sort of opinion. My opinion on this is I shoot for something like 1 to 5% average monthly returns. And that may not sound like a lot, but trust me, with time and energy and effort, it can compound into a good return in terms of making money from Forex. 1 to 5% meaning, if you had $10,000 and you made 5%, you're talking about making some good money over time, right? Of course, that would be $500 a month. So not so bad, right? It may sound a little bit low at first, but again, we are here to give you the no nonsense, no BS, 100% free approach in terms of a course to actually approaching this with a reasonable, level-headed, manner to your trading. In this course that we'll be putting together over the next several months, we will be discussing how to actually approach this reasonably, and why that this figure going for these monthly returns is actually an amazing way to compound and build wealth trading Forex. We'll discuss also the potential of getting funded, which is the idea basically of having investors fund your trading account, which is something that we can discuss once we get to later on in the course, once we're a little bit more down the lines of concepts and reasonable approaches to actually trading Forex profitably. The next question I get a lot of times from brand new traders is, how long does it take to learn something like this? How long will it take me if I start trading Forex or practicing and learning and testing Forex right now? How long is it going to take me to do that? Well, as discussed before, making profit consistently takes time, and it's something that is a skill set that you have to do, and it's very dependent on you personally because it depends how much you're willing to work too. If you think about it, if you're doing this every single day for hours a day, you probably reach your goals much faster than somebody who is just kind of playing around with this, just dabbling, and over time maybe they take a longer time. For me, it took about 2 years to actually start getting to a point where I was break even. What that means, break even, by the way, just means that you are neither making a significant amount or losing a significant amount. You're just breaking even through your trading. And that may sound a little bit discouraging, 2 years, but hopefully with this course and everything that we're going to put together, hopefully I can help speed that up just a little bit. Again, make sure to subscribe. We're going to be doing plenty of course material for this sort of stuff, so it'll be rolling out for you to hopefully give you a little bit of a boost in that time frame. But I do think that it's probably normal to expect a longer term horizon in terms of actually becoming profitable, getting to that point. 2.5 to 3 years is something that a lot of people probably would quote. 2 to 4 years, just depends. It really is kind of like a 4-year degree, and I hope to encourage you to treat it like that if you're really interested. It's dependent on you, but it can take some time, and I want you to know that up front before we jump into a million topics and discussions.